This is what I was working on earlier to show you guys a little bit about entity structures. This is what we're going to talk about.
So you finally started your own business. Invest for the long term, and I'll show you exactly how. Be good to future you.
There's two things that we need to look at here. There's two major things: entity structures and tax statuses. So we have a lot of people come to me and be like, hey, Evan, what is, an S Corp? Or what's the difference between an S Corp and a partnership? Or, hey, I formed a C Corp. I don't know what to do. There are so many different there's so many different words. There's so many different lingos. There's so many different things to talk about and words to say in regards to this stuff. I thought I'd make a handy diagram and break it down. So the first thing that we're going to talk about is we're going to talk about entities, which is this blue bubble section right here. Entities are really, really important. It's actually the first thing that you're going to form. So let's talk about entities real quick. What is an entity? So an entity is basically like a person or a thing or an entity, really. The name describes itself. An entity can be a sole proprietor, a 1099, independent contractor, self-employed. It's all the same thing. We have sole proprietor, that's one type of entity. We also have a corporation. That's another type of entity. Notice how there's no C or an S over here. It's just corporation, because S Corp and C Corp are tax statuses, not entities. So you can form a corporation, but for most people, it doesn't really benefit you too much because corporations don't give you as much protection as limited liability companies. And almost every US citizen can become a limited liability company, or at least form one. So there's no need to even become a corporation in the first place. So we're gonna not touch a lot about corporation. We're not gonna talk about it a lot because it's just not that important to people like you and me and the people that are watching this video. Now we have LLC. That is another type of tax status right here. Limited liability company. That's my favorite. That's my personal favorite right there. Limited liability companies are super, super cool because they offer you a ton of protection, the most protection out of any of these. They're really easy to set up, and LLCs can do a ton of different things, like change their tax statuses, for example. Then we have general partnerships right here. General partnerships are cool if you like risk. So say, for example, that we go into business together, and I use this analogy a lot because it's super, super fitting, but let's say that I'm going to be the one that puts up the money to buy the cars, and you're going to be able to the one that fixes them, cleans them up, and flips them. We're just doing a little business deal on the side. We buy the cars with cash on Craigslist. You flip them up, you sell them for cash on Craigslist. That's a partnership. Boom. Partnership. And in a partnership, you are responsible for your partner's actions in your business activities and vice versa. So there's a lot of room for fuck ups, screw ups, and errors there. And so you don't always want to be responsible for your partner's actions. In reality, I can't really think of a case where you'd want to be responsible for their actions, but anyways, then we have limited partnerships right here. And a limited partnership is, a lot of times you'll see it with families and minors and power of attorneys, but basically it's a partnership where one person doesn't have a proportionate amount of control as the other people. Limited partnerships are not very common, and there's not a lot of good use cases for them. Now let's talk about the tax statuses, because this is the second most important part of the puzzle here, at least. Once we choose our entity structure, we have to choose our tax status. So by default, sole proprietors are taxed as sole proprietors. There's no special taxation, there's no special entities. If you start doing business as yourself, by yourself, for example, selling stuff on Etsy or selling things on eBay, and you haven't created a company and you haven't changed your tax status, you are going to be operating as a sole proprietor, as your entity, which is you, and you are going to be taxed as a sole proprietor, which is the normal tax rates for a normal person. Okay, so we're looking at this and we're like, all right, so what's level 2? We're a sole proprietor and we're doing business and taxed as a sole proprietor. What do we do next? How can we get ourselves more protection, first of all, more legal protection? And that's when you bump over to a limited liability company, not corporation. Corporation does not offer you as much protection as a limited liability company. So for most people, you go to your Secretary of State. So if you're in Wisconsin, go to the Secretary of State for Wisconsin. If you're in California, go to the California Secretary of State. And you're gonna file some documents called Articles of Organization. That's how you create a limited liability company. You simply tell the state that you want to create a new entity, and you do it. You file some paperwork, you pay them the filing fee, which is around $70 to $100 depending on your state. And boom, like that, you're done. You've created a new entity. All you had to do was just file some paperwork with the state and tell them that that's what you wanted to form. You have your LLC, you have your entity now, but by default, LLCs are disregarded entities. So that means that they get taxed like sole proprietors. So even though you formed an LLC and you have more protection, more legal protection, more protection from your business getting sued or you getting sued and having it go into the business. So now that you formed an LLC and you have more protection, you're still being taxed as a sole proprietor. You're still paying the full amount in taxes. So you can see that forming an LLC does not change the way that you're taxed. It doesn't. You have to change that. You have to physically change that on your own. But here's something that LLCs can do that sole proprietors cannot do. LLCs can elect to be formed as S-corps. S-corp stands for small business or subchapter S of the tax code. LLCs can change their tax status to S-corp. So after you formed your LLC and you've gotten your EIN and you've gotten your business bank account and you're all set up, then you're going to submit a form called your S-election form 2553 to the IRS. That S-election form tells the IRS that you want to be taxed like a corporation, specifically a small business style corporation. So if you look down at my diagram below, form an LLC, tax as a sole proprietor to start. After you make $50,000 in a year in profit, you change your status to an S-corp, and then you save money by avoiding 15% self-employment tax. It's super cool structure. I know we haven't talked about the self-employment tax yet, but this is what I'm getting at. So you have your LLC and it's taxed as a sole proprietor because you're at level 2. That's level 2 shit, man. So we want to change your facts so we can change your tax. And so what we do is we file an S-election form after we form the LLC, and now we're at level 3, an LLC taxed as an S-corp. And so the third level of business is where you can really start saving money by avoiding the self-employment tax. So here is the big question. What point do I form the S-corp? At what point do I change my tax status from sole proprietor to S-corp? Well, I did the math on it, and it works out to be about $50,000 in yearly profit. The reason is because it costs about $5,000 to get your S-corp set up. You have to pay a CPA to file additional forms for you. You have to have a bookkeeper so that you can keep your books tight and make sure that payroll goes out regularly. You need a payroll system so that you can be on payroll, so that you can start taking paychecks. Now that's something you can't do if you're an LLC only. So if you factor in the cost of forming the S-corps versus the amount of money that it's going to save you, the $50,000 mark in profit is when it starts to make financial sense. Because once you're making that amount of money, spending the $5,000 will save you $10,000. So this is what I wanted to show you guys. This handy little diagram of my recommendations from going, from level 1 to level 2 to level 3 by using entity structures and tax statuses. Once you have it set up and established and you have the CPA to help you and you have the bookkeeper, it's just on autopilot. It's just simple stuff. It just goes. But it's understanding these different structures right here that really helps make a difference. So think about that next time you form an LLC, or the next time you're going into business with somebody, forming a general partnership. Think about the entity you're forming, and then think about how that entity is going to be taxed. Definitely think about that stuff.